Hey, everybody. It's been a wild ride. Just we know summers suck. And sometimes it's difficult to get up every day, and people are upset by the price action. But I'll try paint a picture of where we are today and what's going on. Now, Bitcoin has taken a sudden wicked dip. Let me check the price as I speak right now. We broke down below. Wow. 56.7. We fell to 56.7. Right now, it's up about $600 from that level. But, we don't know. We knew what happened with the reversal of the yen unwind and everything else. We're not sure what's causing this. Is it market manipulation? Is it market makers? Is it the US government bag on the move? A big dump by Coinbase Prime? We're not sure. But we have stunk. We've tanked below 58K. And that's just sometimes what happens in August. That's why I always prepare a cash bag for the summer doldrums. I don't sell in May and go away, but I do hoard cash. And that's where we are. But a couple of things are looking juicy. We're also looking at a couple of new investment options for different assets too. And let's jump in. But I don't know why we're so weak right now. The ETFs have been a little bit weak, but let's get into it. And this is not financial advice. By the way, yesterday, I work 7 days a week for years and years. I never take a day off. And yesterday I thought it was Thursday. And boy, was the internet cruel to me. So today is Thursday, but try not to be so toxic, everybody. It's just, you're not making yourself feel good or anybody else. Anyway, the story today, I'll talk about some leverage ETFs, some Coinbase action, some stacking by a miner, which you won't believe, a whole bunch of metrics, a whole bunch of mean reversion, how the S&P 500, this is the time for stocks right now. It's been crushing Bitcoin over the last 5 days. Dollar index, the wild ride, fear. I don't even know what else. I know there's a lot to talk about. 35 slides. Let's go. And thank you as well to Patreon, who helped me support the team to bring you everything every single day. Beverly Herbozo. Hi, James, here from Florida. Thank you for all you do in the Patreon community. Thank you so much for being part of the team. Like-minded individuals. Happy people. I hope. Anyway, I can't find my key. There it is. Without this, I'm lost. Let's look at the fear and greed. We are now lower than yesterday. Yesterday was 30. Now it's 29. People are scared, as they say. Real scared. Let's get into the news. Because there are stackers right now. Yesterday I said it's not a retail game anymore. We're not in Kansas. I don't even know what we're not in Kansas means, but somehow we're not in retail Bitcoin anymore. Check out these names. These are the top stackers last quarter. Big players. Kapula, Goldman, Morgan Stanley, etc. I think Goldman stacked a truckload of Bitcoin to the tune of $500 million, $500 million. Morgan Stanley, $200 million. Remember, when you look at those amounts that they are allocating as a percentage of their assets under management, it is a spit in the bucket. It's nothing. Nothing. We are still so early. And it's hard to believe. All these top names are now in the game. We have pension funds and DRW and SIG and Hutchinson and Tudor Investment Group, Aristea, Point72, Anson, Sculptor, DE Shaw, Avenir, Gentrust, Flow Traders, Graham Capital Management Group. Again, everybody's coming. And this is just a tiny tip of the iceberg as to what is going to come. So, for those of you who are losing your minds right now, there's no need for it. This is the time to look behind the sofa and find those nickels and deploy. Now, as I have some cash, I'm tempted. This is the first ever leveraged MicroStrategy ETF. It's 175% of normal. Thank you, DBF430. Sounds like an airplane. SEC, who are not big fans of crypto, just approved the first ever leveraged long MicroStrategy ETF. Again, MSTX is the ticker. And I think I may dabble, but I'm waiting for a big capitulation moment. I know it sounds bad, but I'd love to see like what we had a week ago when Bitcoin breached 50K, fell to 49K. I'd love to see that when the markets are open so I can use this for MicroStrategy. Be fun. Anyway, By the way, with these leverage ETFs, you do not want to hold them for more than 30 days because the fees will eat you alive. Be careful of that. But for a quick trade, definitely. All right, now Mr. 100, stacking again. I know people say, oh, it's a bit centralized exchange wallet. And again, I don't think so because of their DCA strategy. They sell when it's high and they buy when it's low. And they do it in the same incremental manner. And this is not like any other cold exchange wallet I have seen. I've analyzed them all for years and years. And he just pulled off another slick DCA move, grabbing 600 Bitcoin at the 58,500 mark. And that's how you snipe, folks. You know, Bitcoin is getting to the level now where if it gets close to 50K, I will be buying more. And I rarely buy Bitcoin. That's how bullish I am. Now, I buy proxies with leverage, with options. That's my thing. That's why I'm heavily exposed to Bitcoin. But pure spot Bitcoin, you know, I buy less at these levels. Now, speaking of not Bitcoin, but wrapped Bitcoin competitor, Coinbase revealed a tweet about CBBTC. Sounds like a central bank digital currency to me. When I first saw it, I said, no, Coinbase, don't do it. But no, this is a competitor to the Justin Sun Tron wrapped Bitcoin because they see an opportunity and they want to build a very, very strong ecosystem around their base network, which is a layer 2 on Ethereum with some of their version of wrapped Bitcoin. So watch this space carefully. Could be interesting. Also, this just never ceases to amaze me. The joke was back in January, Vanguard, they Vanguarded their customers again. Users with Vanguard brokerage accounts have not been able to buy spot Bitcoin ETFs during their first days of trading. And still, the firm has now committed, doubled down and said, no, we will not let you buy Bitcoin ETFs because it's very volatile and it's bad for generating long-term returns. I just want to strangle these people. What are they talking about? Look at this. This is the history of Bitcoin. Sorry for getting a little bit heated here. Since 2013, only 3 years did Bitcoin not win the year for the top performing asset. The years they won, 2013, 2015, 2016, 2017, 2019, 2020, 2021, 2023. The years they missed, 2022, bear market. 2018, bear market. 2014, bear market. Get the pattern here, ladies and gentlemen? And if this pattern continues, we got 2 more years of bull, potentially, depending on where we go. So that is vanguarding you from alpha. Also, perhaps because they make their money on selling shitty mutual funds. Whoops, poopy mutual funds that will not get you where you need to go, especially in this era of debasement. So everybody, as I urged back then, this is not the place you want to park your hard-earned money. Not financial advice, of course. Shout out to Vanguard for guarding people and keeping them safe from returns. Also, this is kind of interesting how things change. Bitcoin hash is up, but environmental emissions are down. What happened? I thought Bitcoin was supposed to boil the ocean. AI, however, is a different story. Today, from a variety of independent resources, including Digital Asset Research Institute, shows that as price and hash rate grow, Bitcoin mining emissions have not grown at all. And we've known over the past 3 years, the hash rate's gone up 500%, but emissions have not gone up. And the IMF's own data sources reveal the same thing. In fact, their data shows that by 2027, crypto's share of global electricity use and its share of global CO2 emissions will have decreased. However, for AI, both will increase. So AI, if it's a thing, will boil the ocean. But we know that closed dryers use more electricity than Bitcoin mining. Air conditioning uses far more electricity than Bitcoin mining. But AI will use a truckload more than Bitcoin mining. But I don't know if it'll be as much as air conditioning. Probably not. But it's enough for politicians, etc., to rant and rave and spread FUD about things that simply aren't real. All right? So hopefully, for the very last time, we have stuck a pin in the FUD that Bitcoin's going to boil the oceans. Cause for celebration. Let's pop a bottle of champagne, ladies and gentlemen. Thank you, Clint, as well. The Thirsty Sponge. Let's get into some charts. This will help give us some perspective as to where we are, and summers suck. I should do an analysis of sell in May and go away. I stack cash in May, try not to buy anything, and then wait, because certain things have actually gone up a lot since May. Bitcoin, a little bit down, but let's look at where we are first of all. This is the weekly chart going back to March. So you can see if we sold in May, we'd be up because the price was about 64K. Now it's about 58, 59K. Hey, Cybert, thank you for coming. But when you look at these weekly candles, and you look, I've got my little matrix there, the post-halving matrix, the 90-day, the floor, the halving, the roof. We are rising up slowly above that floor. So all is not lost. But according to traditional technical analysis people, this is a bullish setup. So a couple of little hammers down there, and the question is where we go next. Also, we have to look at correlations with traditional markets. We are lagging behind big time. And another view of the world, the setup. Again, I was going to call this video the setup of where we are. This is from Bitcoin LFG, everybody. Hey, Shane, New Zealand is up. Welcome in. This is the chart predicts that the Bitcoin bull run has just officially started. We are just about to enter the green box zone based on history and based on the 800-day cycle. And we've had our little chop solidation period. And now into the fall, into 2025, it should be up from here. Now, people will say, oh, you said it's going to go up from here. Well, no, that's if history repeats is what we're looking at. That's why you look at charts. It analyzes the past and history to predict the future, because sometimes it rhymes. That's why we look at these things. So we'll see if it does. And another very, very important setup, third setup chart of the day, every single time, ladies and gentlemen, every single time. All right. Bitcoin price after the Bitcoin halving, coinciding with US elections. Boom, boom, boom. When these three things hit, we go up. Orange dots are history. And what happened after the confluence of the Bitcoin halving in a year of presidential election and the actual election itself, what happens? Ta-da, we go up. We haven't gotten to the election yet. That comes in November, I think November 5th, 2024. So we have another 90 days or so till we get there. Maybe a little bit less. Yes, sorry. Yeah, maybe 80 days. Is that 80 days away? Anyway, somewhere between 80 and 90 days. Not sure what date it is today. And I think it's Thursday. I could be wrong there, but don't throw rocks at me. Anyway, orange dots. Boom, boom, boom. Each cycle. What happens after we leave the orange dot? We haven't gotten to the end of this orange dot yet, but the acceleration, if history repeats, will go bonkers. And that should be confluent with the election. So some people now say, when they look at this chart, they say, does that mean we have to wait until November before things kick off? Potentially, but I don't think so. I don't think so. Because we're going to get rate cuts in September. Money printing is happening. That floats all boats. We had really good macro numbers today. I'll talk about those in a minute too, and a whole bunch more stuff. So it's painting a pretty okay picture right now. It would be foolish to be bearish with this setup. That's the simple thing I'm trying to actually enunciate right now to you all. Let's look at one other chart too. This is, again, confluence across different metrics. Black is the price. 200-day moving average is about $61,000. Short-term holder realized price is about 64.5. And then we have the on-chain mean, which is about 48K. We're actually bang down on that red line right now. And during a bull market, let me repeat this. Actually, no, the red line, excuse me, is about 46 to 48K. We came close to that during the carry trade unwind. And it's very unusual during a bull market run to get even close to that. We did get close to that. The question is, where do we go next? And the answer is typically, during a bull market, we are above above all of these lines for the majority of it, above the 200-day, above the short-term holder realized price, and far above the on-chain mean. So we are in the kill zone, ladies and gentlemen. That chart is courtesy of ARK Invest as well. Now, the bad news, all the people in stock. The reason we have two bags, we have stocks and we have cryptos. Sometimes they go in different directions, and that's why it's a little bit of diversification. I covered diversification in the Q&A video on Sunday, how I diversify, but this is important. S&P 500 smokes Bitcoin by 9% over the last 5 days. And the people who are not in stocks are feeling the pain. And yes, the S&P 500 has been ripping. It's looking forward to, positive retail sales numbers. It's looking forward to rate cuts. It's looking forward to money printing, all that good stuff. Bitcoin has not woken up. I don't know why. Doesn't make sense. But anyway, another thing to look for too. I don't know how many charts I've just covered. 7, 8, 9. But there's more. This one is Bitcoin accelerates higher when the dollar breaks lower. At least in history, it has done so. And that is, it really looks at US dollar cycles and Bitcoin bull market cycles. And the trend support line is arbitrary, but the point is that Bitcoin experiences the highest velocity upside move when the dollar breaks lower. If the dollar, the Dixie, is weakening from here, it's being coordinated by the Fed and global liquidity being injected. Remember, when they cut rates, the Dixie will fall. When they pump more dollars into the system, the Dixie will fall. The faster it falls, the faster Bitcoin goes up. And even just taking into account debasement, Bitcoin's going up anyway. It's a given. Very simple. So let's talk about money first and who spent a lot on Bitcoin. Marathon Miner does it. They have significantly expanded its crypto holdings by acquiring 4,144 Bitcoin, approximately I calculated, by spending $250 million. And this strategic purchase has bolstered the company's mining reserves to over 25,000 Bitcoin. Ta-da! It's pretty good. And they funded this with debt, but I think about 300 million, 250, 300 million, not sure the exact amount. It's due in September 2031, and the interest rate is 2.125%. Now, if you could give me $250 million for 2.1%, I take it. I couldn't afford the interest on that, but it's borrowing fiat to buy Bitcoin out to 2031 is a no-brainer. And Michael Saylor figured that out back in 2020. So they bought 4144 Bitcoin, I think. I think the average price is about 59,500. Guess, calculation, not as low as they probably could have bought today. But again, when you're trying to buy 4,000 Bitcoin, you can't just, when you're moving that amount of money, you can't get the lowest price. But a sub, what is it? Sub 60K Bitcoin is still a steal for these guys right now. So they are mining 700 Bitcoin a month, and they're buying it too. It's crazy. Why? Because this is why you buy a Bitcoin. Nothing stops this train. Debt is rocketing upwards. US federal debt just hit 35.1 trillion. We just broke the 35 trillion last week, and we're making new all-time highs every day because there's no debt ceiling. They are printing like there's no tomorrow. All right, over the last 3 or 4 years, it's gone up, 13 million at least? And as a percent of GDP, it's now about 125%. And we're kicking the can down the road. Nobody will ever be able to repay this debt. And this is the problem. This goes to why we talk about money printing to infinity. We are in a debt-based fractional reserve financial system. The money supply must continually expand to support the outstanding debt. Otherwise, everything else will collapse. This is the natural state. This is what this chart signifies. As I say, crudely, money printing will float all boats, and it'll never stop. The only way you can protect yourself from this debasement is hardness, which is Bitcoin, and a money reminder. Which one Everybody comment, which one you prefer? The stuff on the left, the World Bank, the BAS and SWIFT, and that guy in the bottom right-hand corner who looks like he just ate a rhinoceros or something. You got your Jamie Dimons and your IMFs and your Warrens and your presidential candidates and your World Banks and all of this debt-based, unfair, not fixable, unsustainable garbage. Or you can have a sustainable, fair, free, self-sovereign, permissionless platform, which is Bitcoin. Always in life, always pick the simplest solution, aka Occam's razor, the one on the right. And this is why. A little bit of history. Go back and study the history. This is from Sylvain, and he talks about how Mark Twain, and I'll repeat this again, history never repeats itself, but it does often rhyme. That's why sometimes we look at old charts. And at a time where America's public debt has just exceeded 35 trillion and it's heading towards 40 trillion in a matter of probably months at this stage, some of the collapses of dominant empires in the past should serve as a lesson for the politicians who are on top of this flawed and not fixable system. We are way beyond the point of no return, and this is a reminder of how hyperinflation brought down the Roman Empire, the Ottoman Empire, the German Empire, pre-World War II, whatever. Again, no empire can last forever with this level of debasement. And the picture is of coins that weren't pure silver or gold. They were mixed with garbage. And they got thinner and thinner. That's where the word debasement comes from, because they were mixing gold with other stuff. And they still do that today. It's people out there with gold bars that are just wrapped in gold, piece of lead in the middle or something else. Anyway, there's some good news on the macro side, and this caught everybody by surprise. Retail unexpectedly rebounded in July. Credit card balances and debt for the consumer is at an all-time high, but somehow they managed to spend. So people are just spending with gay abandon, as they say. And this from Noel. U.S. retails shot up by 1% month over month in July, the highest since Feb 2023, and more than double what was expected at 0.4%. That was crazy. And the core is also up much stronger as well, with June's increase revised up from 0.4 to 0.5. So the US consumer either does not care, or they're not feeling the pain of the amount of debt that they have, or the interest they're paying on their debt, or the interest on credit cards. They're just spending like there's no tomorrow. And I think a lot of what's driving this is that what's it called, buy now, pay later type services all over the place. Everywhere you go, it's like, oh no, don't pay now. Pay us in 4 easy installments over the next 12 months and you'll be fine. What happens if they have no money then? That's the problem. Anyway, Bitcoin Only playlist will be here afterwards and at the end of the video. Let's get into the black hole. First of all, ETFs since launch. When BlackRock started, they had nothing. Now they got 37.4% of all the Bitcoin held in ETFs, which is nearly 5% of all Bitcoin. Now, Grayscale is 25%, down from everything pretty much. And Fidelity is 21.1%, soon to eclipse GBTC, I reckon, because GBTC keeps bleeding. Their mini trust did not help. Grayscale bled another 57 million yesterday, and that's bad. Fidelity had a little outage, 18 million out. BlackRock continue their positive streak, plus 2.7 million, not a lot, but they don't buy all their bags in one day. Sometimes they wait, and they'll probably have a bigger day tomorrow. And this is what it looks like. Lackluster August continues. It sucks. We had a negative day, and that is 6 of the last 13 days are negative. Oh, I forgot to mention, we're day 150 of doing this, 150 days in, and hasn't been too strong a day. And 1,387 Bitcoin were given back yesterday, after the day before they bought 544. But don't worry, because you know who is buying this week and next week will be MicroStrategy and Marathon. Shout out to Fred. This is a big bag. Just a reminder, they have over 25,000 Bitcoin and they just bought 4,144 yesterday. How many more buyers like this can the ecosystem take? And the answer is not many. So be patient, everybody. Hang tough. Be respectful to each other and enjoy the day. Thank you all for coming. See you later. Thank you as well to the mods, TNT Tesla, Sean Donnelly, American Beijing, K8, and the whole gang. and everybody who turned up. Have a good night.